Good morning, traders. This is Jim Comiskey, Senior Market Strategist at MF Global, coming to you live on Friday, October the 21st. Happy Friday. I'll come give you some color on the metals complex, amongst other things. First of all, the opinions that I'm definitely about to express are mine and mine alone, and are not necessarily shared by MF Global. Okay. The gold is currently up $31.70 to $1645.10. The silver up $1.09 to $31.37. Copper up $17.55. Tremendous snapback in the copper, particularly. $323.30 last in D's copper. The greenback down 67 to 76.57, and the euro currency is currently up 109 to 138.74. Okay, your operative here basically, Fed Gov Tarullo, okay? Yes, Tarullo. He was speaking last night at Columbia University on the employment situation in the States here and the economy in general. And obviously we know things are pretty dismal, okay? So I printed the speech. Someone stole it off the printer. What are you going to do? But the gist of it was, yes, okay, things are bad. All right, things, employment-wise, probably, well, no, he empirically states that things are bad in a lot of categories and subsets. Haven't been this bad since the 1930s, okay? He in the last paragraph of his speech, as a wrap-up, he's openly calling for QE3 by the Fed in the form of buying back mortgage-backed securities. Okay, so the rest of the toxic debt that's on, the streets, well, Midtown Manhattan's books, is now going to be taken over by the Fed. Okay, so the banks are officially off the hook. So this is what's caused the rally. Okay, obviously the greenback down big, but in addition, okay, I mean, there's so many cross currents here. It's just where do you start? First of all, the Europeans are waffling worse than Al Gore on a campaign trail. Okay. There's a lot of talk. S&P, let me just read this to you. Okay, we'll go to the rants. The Daily Telegraph, okay, floated this story last night. Where is it? Yes, okay. They were basically, Daily Telegraph carried it, but they cited the Wall Street Journal. Okay, probably the Wall Street Journal's website. S&P would likely downgrade the credit ratings of France, Spain, Ireland, Italy, Portugal, the pigs, okay, in addition to France, okay, if the Eurozone slips into another recession. All right, I'm here to tell you, in my humble opinion, the Eurozone is already in a recession. Statistically, no, they're not. For all intents and purposes, yes, they are. Let's look at some yields here, okay? Again, yields on government-issued paper are nothing more than the cost of money. Okay, what they have to go to the market and pay to borrow money. All right, high yields are indicative of market uncertainty with regards to that particular governmental entity. Okay, so when yields spike on a country's paper, okay, that means that the market is that much more unsure about that country's ability to repay. Okay, so the market punishes those countries. France, their 10-year yield up 6 basis points, 3.21%. Okay, now that might not sound like much, but when you measure that spread against the German Bund, which is at 119.01, that's the highest that the French have had to pay since 1992. Okay, the Italian 10-year up 3 basis points to 6.05, the highest since August 5th. And the spread over Bunds widens to a Euro-era record of 402 basis points, or the most since 1996. Okay, the Spanish 10-year spread over Bunds 4 basis points wider to 557, with the Bund spread at 355, just shy of the August record of 398 basis points. Okay, so there you have it. The market basically is punishing Europe. All right, where do we go next? Here, this is a good one. This is the daily hedge here, the zero hedge rather. Europe is warned to stop making stuff up and delaying by Europe. Okay, the Bloomberg actually carried this, okay. Europe is living on borrowed time, according to Sharon Bowles, chairwoman of the European Parliament's Economic and Monetary Affairs Committee. The next time, she's chiding the people that she supervises, I guess. The next time leaders meet here, there has to be progress made on all key elements, Bowles said. As disagreement between Germany and France over virtually every point, Euro region leaders must talk to the IMF to discuss its involvement in the European Financial Stability Facility, and can't take any decisions on the subject at an October 26th summit. A German government official said in Berlin today, because the Bundestag needs to sign off on everything. It's first they were going to meet October 23rd, and I think they are. But what? They're going to have a meeting to discuss when to have the next meeting, apparently. So for those of you that have been following me, okay, I've been alluding to this for months and months and months and months and months. Okay, the one thing that markets fear above all else is uncertainty. There's a complete lack of leadership, not only in Washington D.C. but in Europe. Okay, so markets are like walking on eggshells here, which favors going long the precious metals. If you're trading futures on my rec, please use tight stops. Okay, if you're stacking physical, I printed up and I didn't bring it. The daily bar chart in the gold. I've been talking about this all week. The 144-day moving average. Basically, yesterday it kissed it and went through it a little bit. Okay, but it held. Okay, now gold's up $32. All right, so if you're stacking physical, I would use that any kind of weakness to continue stacking. Okay, if you're trading ETFs, please just monitor your positions closely. Okay. Couple other things, and then I'll let you go. Again, they don't like me to do long rants on this one, but I'll be back Monday with Comiskey's Corner, no problem. Obama's jobs bill has failed its second Senate test. Okay, the Washington Times carried this. All right, so the jobs bill that Obama is like running around the country in taxpayer-funded buses has failed again in the Senate. Okay, now 2 Democrats and 1 independent joined all 47 Republicans in voting against it. All right, so it's all about campaigning. It's not about you and me. Okay, this jobs bill, all it is a union payoff, I guess. It's so Chicago. Speaking of jobs, this is kind of eerie. All right, but Politico picked this up. Stephen Jobs told President Obama that he was heading for a one-term presidency. Okay, citing the U.S.'s competitive disadvantages with China and a crippled education system. All right, apparently a gentleman has written a biography. Walter Isaacson wrote a biography. It's an upcoming book, Steve Jobs. Okay, in a meeting last year, Jobs told Obama, you're heading for a one-term presidency. The White House needs to be more friendly towards business. Okay, and here it is, guys, and if you've been following me, I'm all over this. Okay, Jobs told Obama that regulations and unnecessary costs put the United States at a competitive disadvantage with China. You know, not only with China, but with the rest of the world, okay? The recently deceased Jobs also told Obama that the U.S. education system is crippled by union work rules. So there you have it. Last thing, and I'll let you go, and this one is going to get the blood boiling. With the approval of the ABC News broke this one, okay? With the approval of the Obama administration, an electric car company named Fisker, okay, received $529 million in federal government loan guarantees, okay? They're assembling cars in Finland. And they received $529 million in federal loan guarantees, not unlike Solyndra. All right, now I'm just going to read this to you word for word. I couldn't make this up, seriously. The loan to Fisker is part of a $1 billion bet the Energy Department has made in 2 politically connected California-based electric automakers producing sporty and pricey, yeah. Okay, these cars are running $97,000, $97,000. Okay, the cheapest one's $57,400. I think I'll get a couple of the cheap ones. I'm going to continue now. Oh, God, this is just too much. Fisker Automotive, backed by a powerhouse venture capital firm whose partners include, wait for it, former Vice President Al Gore, predicts it will eventually be churning out tens of thousands of electric sports sedans at the shuttered GM factory it bought in Delaware. Okay, predicts it will eventually, okay, be churning out at a shuttered GM factory, yeah. And Tesla Motors, whose prime backers include PayPal mogul Elon Musk and Google founders Larry Page and Sergey Brin, say it will do the same in a massive facility tooling up in Silicon Valley. This is just so dirty. This is the greatest theft of taxpayer funds in the history of taxpayer funds. All right, I kind of got to wrap this one up, but I'm hoping that got your blood boiling. Certainly did mine. Doesn't take much these days. But hey, just so you guys know, a shout out to Turd Ferguson. Had a great talk last night, or yesterday afternoon rather. It was scheduled to go like 20 minutes. It went like 45. If I get, well, I got to shoot it through my legal department, but Turd apparently is going to post it on his site, tfmetals.com, tomorrow morning. Again, it went 45 minutes. I don't know if you can fast forward through some of the BS, but it actually is pretty fun. We had a lot of fun. If you'd like to shoot me an email or leave comments on YouTube, please feel free to do so. You see my email address, you see my phone number. Call the desk if you'd like to chat personally. If you do call and I'm busy and I got to call you back, I apologize in advance. All right, have yourself a wonderful weekend. Please always remember that trading futures is inherently risky and not suitable for all investors. See you Monday.